Good morning, everybody. Welcome to the Flow Show. We're here at Friday at last. It's been a long week, and looking forward to a weekend coming, but we've still got plenty more trading things to get through today. So, as usual, we'll get through the news and we'll have a look at what's coming up. Morning, Kay. How are you holding up?
Yeah, good morning, Ryan. Good morning, everybody. Long week, long month, long quarter, long half year. But we are here. We are warriors. We are strong. We still have about, 5.5 hours before, 6.5 hours before we can collapse for the weekend.
Yeah.
How are you doing?
Yeah, it's strange, isn't it? Halfway through the year already. It seems like it's gone by in a flash, doesn't it?
Yeah.
Absolute flash. It's going to be Christmas, which I'm not looking forward to because it means it'll be winter, and I will enjoy the summer for a couple of days longer anyway. Right, let's get plugged in, shall we? A few things going on in China at the moment. Last night they decided to maybe feather the brakes a little bit. The fix came in 7.1268, 1268, down from 1270 the day before. So we've stopped seeing the yuan weakening in those fixes after a few days of doing so. President Xi was out saying that they are planning major measures to further deepen reforms. As noted yesterday, they got their third plenum coming up in July, in the first couple of weeks of July. And then just before the show started, we had the PBOC out. A lot of it was their usual weekly waffle about keeping exchange rates stable and that sort of thing. But they did inject a couple of comments saying that they are going to stabilize the yuan exchange rate expectation and use comprehensive policies to correct yuan deviation. Now, not really sure the context of that. I saw that headline just at face value and I decided to chuck in me long just in case they've decided to change their mind or put the brakes on letting the yuan weaken further. Yeah, not really sure what deviation or which way the deviation they're talking about. One could assume that it's talking about weakening. When they do these fixes, what happens is, just a quick explainer, and this is all about the onshore ones, the CNY. When they set these fixes, the price is allowed to move within a 2% band either side of that fix. And what's been happening since they uttered those comments and getting things weakening is that we've been pushing the upper end of that 2% band pretty much every day since they started letting it weaken a bit. That may be the deviation they're talking about. So in real context, maybe, as I say, just a bit of feathering on the brakes, not letting people get too far out their prams. I got out my long. Maybe I got out too quick, reacted too quickly, but I'll see what happens. I can always get back in if I like. Your thoughts on that one, Kay?
Yeah, well, that's exactly what I said in the room as well. I think they looked at the markets. That 2% band is indeed for the dollar CNY, not for the dollar CNH, the offshore, which is supposedly free to move around. But they don't particularly like it when the market is pushing it too far from the onshore band, and that's where we were. We were trading 730, 730, nearly 731 even this week at some point. So that's above this dollar CNY band. I think they just came out saying like don't go too fast, too far. Because let's not forget that they started this party, right, with injecting liquidity, starting to up the fixing a bit, and we're hinting at letting the yuan perhaps go a little bit. And yeah, I think it's just a Friday call to say, hold on, guys. I mean, not too fast. This is not what we wanted. We are okay with perhaps a very, very gentle slide, but not like really hammering the CNH into oblivion. But it may also be on the back of some thoughts that I've seen, but they are complete opinion pieces, right? There's nothing official about that, but people saying and thinking like, well, if they let it go, they may have started something where the Chinese are going to go offshore with their money even more rapidly and things, and perhaps it's just like a response to everything that they hear. Let's not forget that in line with many banks, I mean the Fed as well, or the Treasury at least as well, they see the flows, but people like the PBOC, like the Japanese MOF, they see flows on daily basis, and they know exactly who is doing what in their markets, and so for them it's somewhere easier to react ad hoc if something is going out of line with what they would expect or what they would allow to do. And so this is where I am right now. I think it's just a warning to the market saying like, don't go too far too fast. But is it enough to curb this? I'm not sure. Of course, I mean, there's the dollar side of things. This afternoon, if we would get a weaker PCE, the dollar China can come off as well. But I think for what the warning is concerned, that is it, a warning. We know that they can send their submarines out at levels, and perhaps they will do it as well, put it back around where the top of the band is, which is not too far from 727 today, according to on the basis of their fixing. So that's about it. I think it's just a warning, not like saying you're not doing the right thing here.
Yeah, no, I agree with that. I might have been a bit preemptive in my exit, but yeah, if I see a dip later on, then I might get back in. But yeah.
Well, you never know, Ryan. I've lightened up my positions a little bit too. I'm still keeping some, but as I said, get a weak PCE, you can be trading 727 again, and then you can pick him up around the top end of their CNY band. Yeah,
exactly. Matthew's just asking, what level would you look at as attractive entry point for CNH? Well, we got this area I've been looking at. I did have some bids in late last week, early this week, to before I took the trade. I got in at 728. It's a bit of a chaser, but I was bidding 27.5, 27, big figure, to get in some longs after those comments, but it didn't happen. It's still quite close. You know, this thing can, if it decides to move, it can move 400-500 pips in seconds. So depending on your appetite, Matthew, if I saw a dip to here over the fix later on, or the PCE, something like that, I think I would have a go. Otherwise, down towards sort of 25s, 24s, that sort of area, the top of this zone here. You know, there's plenty of levels you can choose. It's just what your appetite and what your risk is for this one. You know, sometimes I can be happy to build a small position over several hundred pips, just the nature of it moving. But this is the key point at the moment, 728, 727.5-ish, which was all, you know, this fairly long-term resistance point that we've held after the break. So that's the area I'll be looking at anyway. And you're on the same page. Good stuff. Ali, we'll come to you in a minute, mate. Don't worry. Right, over in data front, we've had some CPI data out from Japan, and CPI again, numbers going the right way. June CPI coming in at 1.4% on that figure there. The Tokyo numbers again higher year on year, 2.3%, core 2.1%. So these numbers are picking up now in Q2, shall we say. There's the other fresh food and energy number, core, whatever it is, that came in at 1.8, above estimations and prior of 1.7%. Industrial production out as well, some green numbers there too. Month on month for May, 2.8%, beating expectations. Though forecast, and this is almost like a flash reading, if you like, produced by the Ministry of Economy and Trade and Industry. So for next month, they're looking at a fall of 4.8%, and then for July, looking at a rise of 3.6%. So a little bit little bit of a bumpy road, shall we call it that? But still, the numbers, again, as we've been pointing out, have been coming in positive so far in Q2. That keeps them on course, the Bank of Japan, if they want to do something at the July meeting, which looks to be picking up ahead of steam. Piece yesterday saying that Japan has been contacting market participants to collect their views on the pace, amounts, and the framework of any future tapering. It's not a huge headline itself. Usually central banks will speak to the big players when they're going to be doing this sort of thing, just to make sure everyone's on board and to get their advice and how it all goes through, because obviously they use a lot of these participants, shall we call them, to enact QT and QE and everything. So it's all part and parcel of it. But it's another indication that this is the direction we're heading. I think it's probably a done deal for July, isn't it? At least QT, if not a rate hike too. Okay.
Yeah. Well, yeah. We've been talking about it. I think we're getting closer and closer. Yeah. Double whammy in July, reduction of bond buying and probably a rate hike. I mean, this everything is aligning now for it to happen, right? So that's probably what is going to happen as well. We have seen JGB yields tick up a little bit, so that is also now the market starting to buy into the idea. Not that it has impacted the yen too much, because we're still talking about BPs. We're not talking about like Japanese yields going up like 25, 30% or so. I mean, it's Japan. You're going up 3, 4 BPs, 5 BPs at the time, not more, because the expectations are not for them to raise by quarter, even not quarter percentage points, and that would be a real surprise. But yeah, I mean, it's. I think we're there, and yeah, that's about as much as we can say about it.
And I've got to say, I'm sad because someone, we like a name for a central banker over here in ForexAnalytix at Forex Flow. We've got all sorts of names: Pancetta, the Big Onion, all the names. Well, someone came up on Twitter with a brilliant name for Kanda. He called it Candemonium, and I thought, well, that's a great name to describe what's going on, Kanda, the FX guy, and what's going on with the yen. And then they're replacing him. He's leaving. It's all part of the reshuffle that goes on in the government. So Kanda is leaving, and he's going to be replaced by Atsushi Minmura. So we'll have to wait and see.
Bless you.
Thank you. Oh, it's the pollen. It's the hay fever. Right, we got our name for him then, Mr. Sneeze. That's what we're going to call him from now on.
Sushi.
Mr.
Sushi Minimura.
Yeah, that's it, Mr. Sneeze. That's what he.
But it was in the pipe to replace Kanda. Recall a couple of months ago, or so. I think it's already a couple of months ago, right? Where there was this news about Kanda leaving. I think it's part of the normal procedures there.
Yeah, I'm not sure, but I think it's at least they replace them every couple of years, something like that. But anyway, he's off, new guy in. We'll have to see if he's going to deviate. Kanda's been pretty, I would say, aggressive in his rhetoric when talking about these things. As we saw the other night when he came out, pretty strong. So we'll have to see whether this guy is cut from the same cloth. Usually they're all one and the same, but you never know. He might take a different approach. We'll have to wait and see when we get his first comments through, his first jawboning through. But we'll wait for that one. Don't know, Ali. As I say, don't know what will happen regarding the new guy, whether he's going to talk stronger, weaker, the same. I would think he's most likely to be following the same sort of rhetoric as all of them, really. There shouldn't be too much of change. They're all speaking from the same hymn sheet. But until we get the first comments, we won't know for sure. Let's see.
He's been part, like most of those officials have been going through all the official institutions, and he's a financial regulator, and he's probably going to just do it all by the rule book and speak when spoken to.
Yeah, exactly. Right, let's move on. Yeah, I don't think dollar yen's going to be going anywhere different too soon. Ali, the conditions for why it's doing what it's doing are still well in place. Anyway, over to the RBA, and RBA's Hauser was out and pouring a little bit of cold water on any rate hike expectations that have been picking up since the CPI data this week. He said the CPI number did pick up a bit in May. The outlook remains uncertain. That has not changed. It may be taking a little longer for policy to feed through. That's a comment to suggest they're going to keep policy on hold and let it do its thing for a bit longer. So there's a whole series of data coming between now and the next policy meeting. It would be a bad mistake to set policy on one number, and we won't make that mistake. So yeah, definitely pouring some cold water on that side. On the hike expectation side, we have to wait and see what the rest of them think, though, including a more hawkish Bullock, the RBA. Coming over to some further data, UK GDP, again, we're getting all these final numbers coming in. Numbers looking better, a slight improvement on the final numbers there for the UK. That's all going to play into the political footballs banding around today, though some of the final numbers weren't too good. Business investment worse than it was expected, certainly worse than last month. Same on the quarter for business investment, so that wasn't good at all. We've also had some of the initial CPI numbers out from Eurozone countries. Some import price data there from Germany. Again, soft numbers, so still disinflationary numbers there. Over in France, CPI, preliminary CPI coming in down 2 pips. The Eurozone measure coming in down a pip as expected. No real big change there. PPI also coming in pretty much the same as last month if you take the revision into account. Spain as well, core CPI staying unchanged at 3%. CPI coming down 2 pips. The Eurozone measure coming down 3 pips, not as much as expected. So again, going the right way for ECB purposes. Unemployment in Germany ticked up a bit higher than expected. Unemployment rate rising a pip to 6% as well. We've also had an ECB survey out. They're running this. They've been running this survey now for the last few months since they started. I don't think it's coming up on any calendars just yet, but it's a consumer inflation survey. 1 year CPI expectations dropped a pip to 2.8%. 3 year dropped a pip to 2.3%. So again, expectations are all part of the ECB's makeup, and if they're going the right way, that will give them confidence that they're doing the job and they can move forward with further cuts. Back to the US data yesterday, which was all a bit meh in the end. Final GDP numbers came in a pip up at 1.4%, nothing to see there. Sales as well up a bit as well. The only real negative was consumer spending, which came in a bit lower. But as I say, this is Q1 data, but that wouldn't have been seen in too good a light. Retail inventories did pick up. I'm not sure why that's a red one. It's a green one. It was flat in retail's ex-autos, but it was higher in wholesale inventories. So that retail inventories also rose 0.7%, only expected to rise 0.3%. So negative inventories can be a bit of a drag on an economy, on GDP. So positive ones means that there's activity going on. People are purchasing stuff, and people are making that stuff to be purchased and put on the shelves. What isn't such good news is pending home sales came in down 2.1%. That is now all the housing metrics showing falls We've had the starts and permits down, NHAB down. We've had pending, existing, and new home sales dipping as well. So those flags are just waving a little bit harder. Again, not going to start jumping up and down just yet. Like central banks say, not going to panic over one number, particularly for those sales numbers. But we've got a little bit of a trend in starts and permits. Maybe we've got a bit of a trend in sales now, and that's something the Fed will look at, because that's an indication that higher rates are potentially biting. So if you get a slowdown there, it's going to knock on into other things, spending and the like. Banxico held its rate unchanged at 11%, as was expected. It wasn't unanimous, though, like it was in May. One person wanted a cut. The Banxico Governor Rodriguez has said that there are space for more rate cuts. In the statement, there was a lot of talk about the moves in the FX and how that's going to potentially impact inflation. Obviously, the weaker the currency gets, the more likely it's to bring inflation with it. So they're jumping on the same bandwagon as every other central bank in talking about FX. There's a little bit of a mix around in some of the inflation forecasts. Some went up, some went down a bit. Nothing too much. Pushing peas around the plate more so than anything wholesale changes. Anything you picked up from Banxico, mate?
Yeah, you said it all, Ryan. I mean, this is exactly perhaps the one that is notable is that the central bank governor came out well after, saying that there's room for cuts. So that should keep the Mexican market on its toes, I would say, in conjunction with, of course, the plans that the government will have in doing the reforms, which are timeline-wise quite unclear. But in the meantime, what I say, what I usually say with currencies who are on the extremes of the interest rate scale. It's still an 11% currency. Can you stay short MEX for longer? So if you want to be short MEX, you better have your calendar and know that there may be some decisions coming up. And if those decisions are putting the Mexican peso at risk, then it's good to be short MEX. But if you're short MEX and you keep your position for a month running without anything happening, it's going to cost you a bit of money. So still the inverse of the spectrum of where the yen is at right now. Yeah, it's just probably going to keep the MEX on its toes. And then we had a bit of a blip last night. Also, it did, I think, move a bit on the Biden-Trump thing, but now it's giving it all back. So yeah, back in the middle and wait for what the US PCE are going to give. But I think the Banxico is indeed ready to cut, and but we know that they look at the Fed as well. So this may be a bit. We need to watch out what the Fed is doing as well. So
Yeah.
But for the rest, I'm not going to read too much in that Banxico meeting either.
Yeah, no, exactly. And just to keep you aware, we do have a substantial option expiry for this pair at 1850, just under 2 billion going off later. There's been I do these numbers every day, so I sort of get a bit of a feel for when things are quiet, when things are a bit busier. It does seem this week things have stepped up in the option expiry stuff. Just the sizes have ticked up a bit. Could just be leading up to this end of month stuff, a few end of month positionings coming in. Like, very rarely do we get expiries in euro yen, but there's 3 today, half decent numbers, which folks in the chat room will be able to see on the dashboard. So yeah, keep an eye on the New York cut, 10 a.m. New York time, 1400 GMT, 1500 BST. Just with this additional sizes we're seeing in expiries, might just have a little effect around that time, or the run up to that time as well. Right, what else we got? Germany says it may object if the ECB tries to lower French yields. For those that may not know, one of the items in the ECB toolkit is their ability to step in if spreads blow out between Eurozone countries. Obviously, France is under the cosh with this election stuff. That's being seen in the spread between Germany. But Germany's saying, no, they don't want to see the ECB stepping in, which I'll make them right. But we'll see, obviously, what happens on Monday morning and this first round elections to see what is going to happen with the market and what it does there. So keep that in the back of your mind for latter part of today. Maybe after the PCE data, the market may switch its attention to jockeying, positioning around for the weekend risk. Kay, I know you watch them spreads pretty closely.
Yeah, they are at the highs, which is normal somewhere. There's the uncertainty. Well, uncertainty. We're seeing all those polls showing exactly the same thing: is that the far right is probably going to get it, and then there's going to be a tussle between whether the far left is going to annihilate Macron and his center parties. But yeah, the spreads are at the max right now. Logic, it's compare it to option volatility, and the vols are always very high ahead of an event, and we will see on Monday once we will have some results coming in, whether those spreads remain here. The funny thing though is that if you look at, shall I take it over?
Oh, no, I just fat fingered it.
Okay.
Is it back?
Yeah, so we will see on Monday what this thing is going to do. It's funny though, I was going to say that the Germans are telling the ECB not to do it because we have of course, Lagarde is French, and then we have Villeroy in there. Yeah, maybe they think the French may be tempted to support their compatriots come Monday or next week in trying to bring the spreads down. But we must say we have heard quite a few times in the past that Lagarde said ECB is not there to take care of spreads unless things really go very, very far.
Yeah, unless it's a proper financial stability issue, which this one isn't. This is pure politics. I still find it strange that people are jumping out of France into Germany, which isn't exactly running on full tilt at the moment anyway, as a safe haven in terms of the economy and whatnot. And they have problems in the European elections too. So it's almost out the frying pan into the fire.
Yeah, for the little story, it's actually if you look purely at Europe and economic data, I've seen of late Spain is actually not doing too badly if you compare to France, Germany at least.
Yeah, exactly. And Ali, have some patience, mate. You should know us by now. We've got all this stuff covered, and you will be hearing about all the headlines, which will be coming up pretty quickly, actually. But we'll go to South Africa. Sorry, mate.
Okay, go ahead.
Yeah, we're going to go to South Africa first, if that's okay, because we've had Ramaphosa saying, we had a whole host of headlines. We've been through the mill on this one. He's held talks with the Democratic Alliance Party because those lot threatened to quit the coalition already before it's even really taken shape over arguments going on there. Then that was yesterday. Then stories today say that the DA is still committed to these cabinet negotiations and they're not going to go throwing their toys out the pram just yet. So we've been a bit up and down in the Rand on those headlines. As you can see, we've been up, we've been down this morning. What has been set, though, is Ramaphosa calling the opening of Parliament for July the 18th, which makes everything a bit of a deadline now to get this cabinet in place, get a functioning government ready to go when Parliament opens. So we'll have to see whether they're going to get this done sooner rather than later, or if it's going to be the usual political thing of leaving it all to the last minute. In the meantime, if you trade in the Rand, expect to get expect volatility to remain swinging between these sorts of headlines right now. And right, over to what Ali's talking about. Yeah, another bit of weekend risk to keep in mind of. I spoke yesterday about Germany telling its citizens to get out of Lebanon. Other countries have done the same. The Pentagon issued a statement yesterday saying that it's moved military assets into the region of Lebanon and Israel. So they're either prepping for something or maybe just trying to keep the peace over there. So that is a bit of a growing risk. Mainly because of if things obviously spread into Lebanon from Gaza, it becomes a whole different thing. It brings Iran into it again, and so on and so forth. That might be a little bit more political risk trade, if you like, or geopolitical risk traded than we've seen from what's going on with Gaza. So, as Ali rightly says, keep your eye on gold, keep your eye on oil. If something happens over the weekend, if you're short those sorts of assets, you might want to think carefully about what you do going into the weekend. You don't want to get hit by a headline and find that oil's $5 higher and gold's $50 higher, because if you've got stops at a certain level and it gaps above them, that's where you'll get your first fill, unless you've got guaranteed stops. So if you short those assets, be careful. You can always get out and get back in on Monday if nothing's happened, but take care of that. That's it from that. Kay, anything else?
We had the SNB intervention report out for the Q1 2024. As expected, they completely stopped buying Swiss franc. Of course, they even reversed it, but in a very small amount. I think 280 million Swiss franc over the whole quarter that they bought currencies for. So that's about it. Norges Bank reducing just slight bit the foreign currency buying, Norwegian selling for next month, and that's really it. Month end, quarter end, half year end for some. Bring it on. Another 4 hours or 5 hours. Another 5 hours to suffer today.
5 hours. Oh my God. Make it stop. I don't know if I'm going to last it out. We shall see. Well, I might as well stay on the rand. Oh no, let's look at what's coming up, because we've got the PCE data. So we'll have a quick butchers at that. Oh, where am I going? There. So we need to see what's coming up from the numbers today, because that's going to be the big data point that everyone's watching. Now, it should be said, this one doesn't tend to have big variations in the numbers. That's first and foremost. So if we do get a big variation, then we're going to see the market moving. Core PCE is expected down 2 pips to 2.6%. Headline PCE expected down a pip to 2.6% as well. Now, same rules apply. If it comes in as expected, then that's all fine and good. Inflation's on its way in the Fed's preferred measure. If it comes in softer than expected, that's going to get people thinking about cuts coming sooner. So we will see the natural reaction in the dollar yields and whatnot as the market changes those expectations. Don't expect huge moves, because again, we're just trading around the calendar. Unless it is, something like 2% or 2.3%, a real big drop, then that will get the market really getting dovish. On the flip side, if numbers come in above expectations, unchanged, even higher, then that's going to get all the hawks in the market screeching again, dollar rising, yields rising, that sort of thing. Higher for longer. We're still away from the market talking about hikes again, but it will just be higher for longer. So, the reaction from that. Now, obviously, we've got the spending and income numbers as well to keep an eye on. So they're sort of secondary to those numbers. Now, the thing with this is that this is obviously fairly good big data, and we've got this big end of month stuff going on, the last day of which is today. So we've got a situation where, however the market reacts to this initially, it could all get flipped on its head for end of month, depending on what flows are going to happen. It's touted as dollar selling. So you have to take it in two parts. note what the market reaction is to this, then watch the month-end stuff. If the month-end stuff goes against this, let's say we get a 2.4 core PCE, dollar sells off, yield sell off. If month-end we start seeing a lot of dollar buying, that is potentially an opportunity, because once we get over this month-end stuff, we're going to go back to trading the fundamentals, and that means whatever happened here. So this is how you need to watch it going in. Obviously, if we get a soft PCE data, dollar sells off, and then end of month is selling off, then what you may need to look at, or what I'll be looking at, is does that move go too far for what we should be doing for the PCE data? So, you know, if I see euro dollar up at 109, 110 or something on month end after soft PCE, I'm going to be thinking about playing the range, because that move will be too excessive for the data. So that's the way I'm judging it today. But I'm just saying, don't just take the PC number and run with it and ignore what might happen in month end. Japan didn't intervene in the Forex market during the past month. That their FX report has just dropped. So no intervention last month. Sorry, Kay.
No, as I said, are you aspiring to replace Kanda as well? Because you're talking about I will counter excessive moves. I mean,
yes,
maybe. Hey, maybe, you know, who knows? Maybe they would love a foreigner for once to direct the operations there.
Listen, if I get to sell what was it, sell dollar yen at 152 something and buy it back up at 148, yeah, I'll do that all day long, mate, if they want to pay me to do that like he did. Oh yeah. Your thoughts for PC and whatnot?
Well, I said yesterday, well, first of all, just to make a little point about the PCE, you can see 0.1, for instance, but the and that's going to be around that number. Now the algos and the smarter cookies, they will look at the second digit behind the dot, and because if it comes out, let's say 0.6 and it's rounded to 0.1, that would be a negative. It comes in 1.4, and that would, and where or 1.49, even when the number is 0.1 on the headline, that will be interpreted completely different. So that is already one thing that the market is looking at least the algos. But yeah, I think it should be, as already said multiple times, it should be a well-documented number, not coming out too far from expectations. I saw a lot of 0.12, 0.13, and somewhere the 0.16, which would be a 0.2 print. But I do think that if you take it in combination, as you said, with the end of month, we may see a bit of a swing this afternoon in the case that it comes out negative. If it comes out, for instance, on a flat reading, it would be something, right? And that the market would take the dollar apart a little bit in the last few hours of the month, I reckon. That is, I think, the bigger side to watch. And also in the mix of month end, we may have quite a bit of rebalancing to do between bonds and equity markets. So don't be afraid to don't be surprised to see bond and equity moves as well this afternoon. It is, after all, end of quarter and end of semi-year as well for many.
Yeah, very much so. And it is this period is a tricky period, the half year end, because there's so much that can go on, and also it doesn't just stop with the end of the month. It can we can see some of these moves continue in the new month, or different moves first days of new month, because if you've got people who have, you know, let's say you've got a fund and they're allocated X amount in such an asset. If that asset price grows, then they have to rebalance that. They may shift that money into another asset in the second half of the year. So, you know, you can get a little bit of funkiness going on in the first 2 days of the new half year, just on that sort of stuff. So don't think end of month is the end of it this period of time. Right, let's have a look at what's going on in markets. Ali, you're asking about your two trades, your gold and your euro dollar. It seems like you're doing okay. You've taken some partial profits. You're trying to run the rest. Got your stops locked in, and you've learned that the money is into riding trades, not in taking profits early. Well done, mate. You know, that's what we've been preaching here for a long enough time. You know, make the most of your winners, push them as far as they will go. Don't be so hasty just to take all your money. It's not a bad thing taking all your money, but you know, it's far traders. A lot of traders find they lose more quicker than they make, and the reason is because they tend to panic when they're in money, in profit, and they take the profit far too early, and they let the losers run far too long. So you've got to change that balance the other way. Okay, and it looks like you're doing a good job, mate. Long may it continue. I hope we've helped you along with that as well. So keep it up. It won't always work. Sometimes you'll let a trade run and it will hit your trading stop or go the other way, but you won't make as much. But I'd rather make something than lose something. I'd rather make a little than lose a lot, shall we say. So keep it up, mate. All good. We'll stick on the dollar rand while we're here for anyone else that's trading it. Obviously, these headlines have given it a sink. This 1850 level proving a bit of a tough nut. I did take a little bit off up here yesterday. As I mentioned in our chat room, you've got to respect the tech in your way as much as you respect the tech that you put a trade on for. You know, it's no good saying I'm buying off this level because I trust it, but I'm not going to do anything until 19 when you've got all these levels in your way. At the moment, it's proving a decent take profit. At least I've maximized this move so far. Obviously, I want it to keep going because I'm still long, but if it doesn't, I'm going to be happy that I got out some up here. For now, this 1810, 13-ish, 14-ish area is the support area to watch if we get a move down here. Pretty close. Watch the fixes, anything. I might be tempted to add back a bit of what I've cut if we see a move to there, or 18, maybe even down to these lows, depends on what happens. As long as we don't break down below this area, these prior lows, we had a little support, little break, then it held it on afterwards. So that's going to be really the big pain level down here. So I might add if we get down there, but I'll play the price action. What else? I'm going to look at dollar CAD. I'm bidding on this one. I missed these moves up into the 30s happening when I'm tucked up with Teddy in bed, and I was in the shower when that one happened. So I didn't catch any of this move up here, so I've taken a bit off just above 137 my longs. We can't seem to hold this 137 level just yet. So that's a bit concerning, but we're looking like we're just breaking this trend though. As you can see, we're now stepping up. We're getting some higher highs and higher lows. So maybe we've just turned around this shorter term downtrend, and maybe we're heading for a little bit of an uptrend again. So again, happy to stay long on this. I'll react a bit over what happens in the fixes and whatever. Might add back in again if we see a move down to 136.50, even more so if we get moved down to these lows again, that big support area. But otherwise, going the right way, and I'll be doing some slicing if we go up again. Right, okay, I'm just looking at the clock, so I'm gonna pass the puck over to you for a couple.
Yeah, it's gonna be a quick one.
Yeah,
gonna be a quick one. But we had interesting discussions about a lot of stuff today. So it doesn't always perhaps have to be pure charts showing, because we are trying to bring you something else as well. And if you guys probably know, but we're also on Face where there's a lot of charts being shown as well. On here we always have like interesting discussions about everything. But just a quickie. Euro dollar still in the broader. I've drilled down a little bit today, but still in the broader triangle. Watch out for this end of month, end of quarter. because the imbalances between the US and the European equity markets are pretty sizable. And depending on how this PCE comes out, we know that there is a risk on the French elections over the weekend. But between, let's say, noon here and 4 p.m. this afternoon, a lot can happen. And it wouldn't be the first time that we see a complete counter intuitive move, and especially today, I would say be a tad careful about specifically the euro dollar. So I'd say between the PCE and the fixing, especially if the PCE would come in a little weaker, be careful on this one, because the models are really calling for quite a bit of imbalance here, which could drag the euro up quite a bit. So 107 and a quarter, 107.30, 35. If that would go, it may accelerate, and that may be the key on the PCE may have the key on it. Okay. Yeah, that's the level I'm watching. Obviously, if the PCE is strong, and then when we come in again on Monday, we look at this 106.60, 106.5. Yeah, on the euro dollar, this is going to be a biggie. If we break above here, rather than really look at the level 107.50, 60 or so, look at the clock. All right, today you really have, apart from fundamentals, apart from takes or whatever, you really have to trade with the clock very close to hand. Gold, I have reduced just a little bit today ahead of the PCE, because we never know what's going to happen there. But as I already said, in the event that we would get a weaker PCE, I really start to think that gold could be an asset which we may have to have a very close look at for even the second half of this year, because central banks will probably, a lot of them, barring Bank of Japan, will cut. And if data in the US start to soften, they may actually have to cut earlier than expected. But for today, respect those levels anywhere here, back in the triangle. I think we may accelerate a little bit back into the 2350s. Of course, if the PCE comes in much stronger than expected, watch your 23, watch your 2280. This is going to be a very big level on the downside. If it breaks, there may be some pain to take from people who have went into too long. All right. Quick one, and then I give it back to really Ryan. Quick one on the Aussie. We had an inexplicable move lower. I mean, that is my reasoning anyway. I don't see why the market bought dollars on that so-called Trump victory in the thing, because I think when the dust will settle on either of them, it may both be dollar negative. But anyway, Aussie is kind of holding a bit of a support, very short time term support line here. 66.15. I think the big level for this afternoon is 65.80 once more. And watch out, because if this PCE underwhelms, Aussie is one of those other currencies that may benefit, in my opinion, from end of month, end of quarter flows. So watch what's going on. 67.0515. All right. If that would go, we may see an acceleration, even with technically driven and also end of month, end of quarter driven. So these are your levels here to watch on those currencies. And with that, I'm giving it back to Ryan. And on the sterling, it's rather 126.20 and 125.80 figure to watch.
Thank you very much, mate. I'll just grab it back quickly. A couple of people wanting to look at Aussie Kiwi, which I'm keeping my eye on myself. I've just yeah, there's a bit of a level here. I've just noted it around the 45, 50-ish area that we're on. We're up testing this top of this wedge, which we're just deciding what we want to do about it. Not a indicator level I want to trade, a line I want to trade, but more so it's just a bit of confluence in here. Yeah, as Kay said, with the Aussie going, Kiwi's gone as well. We're now moving down. We've been testing this support zone. We've busted through the fib. we're just about holding on to these tests of these moving averages here. So there's a whole ton of confluence down here. Whatever this reason is why we've had a sell off in this and the Aussie, I don't know. I think I'm going to say it. This is one of the pairs to watch closely for where we finish up the week. If we're going to get some end of month flows and whatever, PCE, I think if we can manage to close back above at least this broken support around the 60, 80, 90 area, if we close above that at the beginning of the week, then I think maybe, we've just seen some end of month stuff, and then, we can move on from there, whichever way. If we're below this, maybe the fib, maybe this zone at all, then it's going to put a different complexion on the pitch. It will keep this downtrend in play, and maybe we're heading lower. Now, obviously, for Aussie Kiwi, that's going to be a case of which one's going to move faster, the Aussie or the Kiwi in that type of move. It's a bit like cable and euro dollar when you're talking about euro sterling. They can both move the same way, but sometimes one will move quicker than the other. And it looks like the Aussie wants to move a bit quicker than the Kiwi at the moment, at least to the upside. So this may be a level worth looking at. I would look more to 110, but then I'm always a bit picky. I always want to be a bit more greedier. But I'll keep an eye on this one anyway, see what happens, because I am looking for maybe to get into some shorts up at these levels that we're seeing here. So anyway, that's thoughts for Aussie Kiwi. I hope that's sorted you out.
I think Ryan, your Kiwi had 3 issues over the past few days. It is first of all the Aussie Kiwi starting to move back up, and I also think end of month we have seen over the various hourly fixings like some cross antipodian cross selling and euro sometimes buying or sterling sometimes buying versus those things, and they had a few issues, and then of course your I don't know why they bought dollars on this Trump thing, but I think you had like. The Kiwi was especially a bit vulnerable. I think the market may have been a little long on that one too.
Yeah, exactly. And we've had that bit of a switch. The Kiwi was busting out some decent data. We had the RBNZ talking a bit more hawkish, and then the data seemed to turn, and all that air came out the tyres as well. So, that's as quick as things can change in these markets. 1 minute you go in one way, next minute you go in the other. And thank you very much for your comment there, Matthew. I hope we are giving some good advice, good stuff, and I hope it's helping with your trading and getting through the markets. And on that note, we will call it a week for this week. Thank you, K-Man, and thank you to all you viewers for coming here, supporting us, watching us, and for all your valuable comments. Have a safe trading day the rest of the day, and have a very good and relaxing weekend. Take care, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.